New month, same story. Canadian real estate prices are up once again. But looking through the data, there's more that can be learned. We're seeing inventory levels in some areas start to add up. And with mortgage deferrals ending this fall, are we going to finally see some downward pressure on prices in Canada? I'm going to go over all that. We're going to break down all the major Canadian real estate markets because this is your September 2020 Canadian real estate market update. Hey everyone, welcome back to Bald Prairie Real Estate. My name is Matthew Pfeiffer. I'm a real estate agent in Regina, Saskatchewan, but I'd like to be known as your favorite realtor on YouTube. So if you like education and real estate content or these market updates, which I'm going to guess you might like them seeing as you did click on the video all about the Canadian real estate market, might as well go ahead, hit the subscribe button right now because then you won't miss any more of these market updates, plus the rest of my fantastic educational content all focused on the Canadian real estate market. So first thing I was doing all my videos is a bad dad joke. And this one might be my favorite so far. And that is, why don't crabs give to charity? It's because they're shellfish. Now, before we get into breaking down all the stats, let's talk about what has happened so far this year really quickly, because we need to put this into context so the numbers make a little more sense. And that is, the spring market never really happened. Well, it just got pushed back actually is what ended up happening. So normally March, April, and May are some of your busiest months of the year. Those sales that would have happened March, April, May ended up happening in June, July, and now August. So now the question becomes, how much pent-up demand is left from that spring market that got pushed back? How much will low interest rates continue to drive buyers to buy more homes? And of course, the big unknown that a lot of people are talking about right now is the mortgage deferral cliff. And that is because mortgage deferrals are ending in September and October. We're going to start to see inventory levels add up if homeowners cannot pay their mortgages and are forced to put them up for sale or even be foreclosed on. And many Canadian cities, and you'll see it in the stats, are very low in inventory levels. That's what's kept this a strong seller's market. But as inventory starts to build up, you're going to see the shift from a seller's market to a buyer's market. And when that happens, prices will start to decline with it. But enough for the chit chat. Let's go through each one of these cities, starting in Regina, Saskatchewan. Well, we didn't make it back to back sales records in City of Regina, but we still had a big month. 347 homes were sold last month in Regina. That means that June, July, and August of 2020 are 3 of the 5 biggest months for sales we've ever had in this city. The big months we've had has meant that the City of Regina home sales are up 6% versus where they were in 2019. 2019, we sold more homes than 2018, so we're seeing sales numbers continue to increase. How about listings? 489 listings came on the market in the month of August. That's obviously up versus August 2019, but the total number of homes that have come up for sale in 2020 versus 2019 is down about 9%. And 2019 saw less listings come on the market than 2018. There's about 1,150 houses on the market to start the month of September, and that's been oddly consistent all year long. We've had about 1,150 to 1,200 houses on the market. So essentially 100 houses will come on and 100 houses will sell. The increasing numbers of sales and the decreased number of available houses on the market has meant that prices have started to climb in Regina. Since January 2020, our benchmark price, which was around $240,000, has continued to increase every month. It's now at $275,000, so it's up about 10% from where we started the year. Much of this is being driven by single family homes. Those continue to be very hot commodities in Regina. We're seeing bidding wars, multiple offers, that type of thing, which we haven't seen for a long time in Regina. The townhouse market is also fairly strong. Condos appear to have stabilized, but we're not seeing price increases in the condo market. So for Regina, where we had a number of years of declining prices, it's kind of nice to see increasing prices, increasing sales, decreasing inventory, kind of making more of a balance to slightly shifting to a little bit of a seller's market in the city of Regina. Okay, let's start off in Vancouver, where 3,047 homes were sold last month. That's up 26.6% from the year before, but down 2.6% from the month before. Listings are up 55% versus last year, but they're down 2.1% from the month before. There's about 12,800 listings on the market right now in Vancouver. And we are starting to see the number of apartment style condos, the levels of inventory are increasing. Their benchmark price though was $1,038,700. That's up 5.3% from last year, and it's up 0.7% last month. So with immigration being down, the tourism market being down, we're going to see how much of an impact that's going to have on that specifically apartment style condo market in Vancouver, where we are seeing inventory start to stack up, but single family homes have continued to sell well in Vancouver. Moving on out to Calgary, 1,573 homes were sold in the month of August. That's down about 0.5% versus last year, and it's down 15% versus last month. Sales year to date in Calgary are down about 13%. Of course, Calgary is being hit with the double whammy of low commodity prices and of course the overall economic downturn. 252 new homes came on the market last month. Now that's up 8.6% versus last year, but it is down 15% versus the previous month. There's just shy of 6,500 houses on the market right now to start in Calgary. Now that's down, total inventory is down about 10% versus last year, but it's up 9% versus the previous month. Their month's worth of inventory is right around 4%, which is down just shy of 10% where they were last year. And it's up though 12% versus the previous month. So Calgary saw kind of a lower month in sales, but their overall inventory is still at about 4%, which is right around that balanced kind of market. Their benchmark price is $420,800, which is down about 0.6% from last year, but it is up 1% from the month before. Out in Edmonton, now I've got the entire Edmonton metropolitan area in our stats here, and they had 1,181 homes that were sold. That's up 20% versus last year, but it is down 13% versus last month. There were 2,863 new listings that were put up. That's down just shy of 4% versus last year, and it's down 10% almost from the month before. There's about 7,500 active listings in the entire Edmonton area. Their total inventory though is down 14.5% from last year and down almost 6% from the month before. The average price is about $374,000. That's up 2% from last year and up just over 1% from the month before. How about Saskatoon, one of my favorite cities in Canada? 461 homes were sold. Now that's up 31% versus 2019, but it's down 17% from the month before. 780 new listings came in the market. That's up 7.5% roughly versus 2019 and down 5% versus last month. There's just shy of 1,500 listings on the market right now. So their inventory is down about 30% from last year. They have about 3.3 months worth of inventory, but it has started to creep up. A couple of months ago, they were around 2.5 months worth of inventory. Their benchmark price is up 2% year over year, just over $300,000, and it's up 2% from the month before. The single family home market is very strong in Saskatoon, especially in that $250,000 to $400,000 price point. But interestingly enough, apartment style condos have actually seen the most price appreciation since the start of the year. Continuing out east, where we're in Winnipeg now, and of course, the Blue Bombers had to get the entire CFL season canceled so they could continue to say they were Grey Cup champions. But they did have 1,845 homes sold. That's up 28.2% versus 2019, and it's up about 3% versus last month. Just shy of 2,400 houses were put on the market last month. That's down about 1% from last year and down 2% from the month before. They've got about 4,200 active listings. Now that's down 29, almost 30% from last year and down 8% from the month before. Their benchmark price is $336,500, which is up 1% from last month, and prices have been rising in Winnipeg since January. They've got very limited supply, and those low interest rates continue to fuel a fairly hot market in the city of Winnipeg. Okay, out in Toronto, Canada's biggest real estate market. Sales were up 40.3% versus August 2019, but they were down 3% versus last month. There's about 10,700 homes that were sold. Listings were up 56.8% versus August 2019, and they've got about 16,600 active listings right now to start the month. That's up about 5% from last year. Year to date, sales are still down 4% versus 2019, but listings year to date are down 10% versus last year. The benchmark price in Toronto is up about 11%, so it's about $890,700. Now that is up about 1.2% from last month. Interesting, when I was going through average sales to asking price, it's still around 100 to 101%. So essentially what sellers are asking is what they are getting. We are seeing strength in the single family home and townhouse market, but apartment style condos are showing signs of weakness. We are seeing months of inventory in that category start to add up a little bit. Overall though, across all types of residential property for sale, the months of inventory is actually down. They're about 1.8% months of inventory versus 1.7 months of inventory from last month. But like I said, the condo market is starting to add up inventory a little bit right now. In the nation's capital, 2017 homes were sold. That's up 17% versus last year. Just over 2,500 new listings were added in August. Now, they have less than 2,000 listings on the market right now, so they only have about 1 month's worth of inventory. Their average price is $550,000, and that's up a staggering 19% versus last year. And we're seeing increases in prices in Ottawa pretty much every single month since the start of the year. Ottawa is a very hot market in Canada. So the Montreal metro area, which is one of Canada's hottest real estate markets right now, they had 4,800 homes that were sold. That's up 39% versus 2019. It is down 9% versus last month. Their median price, sale price for a single family home was up 24% year over year and up 2% from last month. So it's $427,000 for the median price for a single family home in Montreal. That 24% increase is the largest year over year increase ever in Montreal. Part of that though is because they had a huge push in homes that sold that were over $1 million. And so that played an increase in that median price point. There's 6,200 new new listings that were put on the market in Montreal last month. That's again is up 39% from last year. It's up 5% from the month before. There's just shy of 13,000 active listings in the Montreal area, but that's down 21% from last year, up about 1% from last month. Once again, supply is a huge problem in Montreal, especially in the single family market. That's what's driving up prices. In fact, Montreal would probably sell more homes if there was more inventory to be available to be sold. Okay, let's finish things off in Halifax. Now, the Halifax market is probably the hottest market in Canada right now. 784 homes were sold. That's up 20% from last year and 6% from the month before. There's only about 1,500 active listings in Halifax to start the month. That's down 46% versus last year. There's less than 3 months worth of inventory available in Halifax. The average price is up 9.4% year over year, sitting about $343,000 in Halifax. So did I miss a city that you wanted to see covered? Well, let me know in the comments below if I missed a city you want me to cover my next Canadian real estate market update, and I'll see if I can get it added for you. I know a lot of people have asked for a lot of the smaller centers. Don't worry, I'm still working on that. I'm trying to get a strong data set to work from so I can provide you continuous updates on those smaller Canadian real estate markets. Looking back at the data from the last couple of months, there's 3 trends that I see are very clear. The first one is the pent-up demand from the spring market that never happened. Buyers that would have bought in March, April, and May decided to push that decision back to June, July, and August. And that's why we saw huge sales numbers in those months. How much longer that pent-up demand can continue, I'm not sure. We are seeing sales slow a little bit, but that's also typical in the fall market that sales will start to drop. So I'm not sure if it's pent-up demand running out or just the typical course of a fall market starting to slow down. We'll have more evidence to see which way it's going in the next month or two. One area though of strength is single family homes. Those continue to sell exceptionally well in virtually every market in Canada. Buyers have decided to move out of the city core into the suburbs, buying single family homes. That of course means that downtown high-rise style apartments are a weakness in the market a little bit right now. We're seeing, especially in Vancouver and Toronto, inventory levels start to build up in those 2 areas. And as inventory levels build up, you will see prices come down. Now, are we going to see a more deferral cliff and also a whole bunch of houses come up for sale? No, that's not going to happen. It's not like people are just going to put up their houses for sale immediately when their mortgage ends. We are going to see inventory levels probably start to build up though when those mortgage deferrals end. But interestingly, just as I was sitting down to record this, I was reading some articles, and I'm going to put up a quick little headline here so you can take a look at it. But summary of the most recent news that I've read is that the number of homeowners that had their mortgages on deferral has continued to decline. They've gone back to paying their mortgages. All of the big 6 banks, except for Scotiabank for some reason, saw the number of mortgages in deferral decline. So homeowners are going back to paying their mortgages. But those mortgages are coming, or deferrals are coming to an end in September and October mainly, and to some extent November and December. But in the next 30 to 60 days, we're going to see very clearly who needed mortgage deferral or who just took them because it was available. And that's going to lead us to, are we seeing higher levels of inventory and declining prices, or are we going to see people going back to paying their mortgages and it kind of stabilizes the market? Are you a first-time home buyer and you got a bunch of questions? Well, guess what? I've got a home buyer series of videos. I'm going to put it up right here so you can take a look at it. It's going to answer all the questions for you, the first-time home buyer. But if you're just wanting to know more about the real estate market, maybe some tips on buying and selling, well, I've got great playlists for that. I'm going to put one of them up right here so you can check it out. Thanks for watching, guys. That's your September 2020 Canadian real estate market update.